But that doesn't mean that income is the same that profit, and that's the biggest misunderstanding that they have. The total income is the total amount of money that they have. To that total income, we have to subtract the taxes, the cost of sales, that is also known as the client acquisition cost, and the operational cost. Then after we subtract all of that, we're gonna have something here that I'm gonna call the real income. Some people is going to say that that's the profit, but the reality is like that money is out of there for you to allocate it, say in different pockets in the bank. And then out of that real income, the 10% you should save it for reserves. Then you have a 30% to growth, because we are in a growth stage. So that is extra money for marketing. This is extra money to hire people, extra money to get new equipment, extra money to get new softwares. So you're gonna allocate the 30% of your real income into growth. And then you're gonna have also the payroll, which is 30%. To be honest, in most of the companies, this value tend to be higher, but then you need to rebalance your percentages depending on where you are. But let's say 30% for this example. Then you're gonna have 20% of profit, and that's the money then you're gonna be putting in your pocket. And then you're also gonna be saving a 10% for operational and admin costs. And then you're gonna make sure that all these percentage are gonna be balancing your books, but getting you 100% of the real income that you have here. Let's see that at the end of the year, you get $2 million coming into your pocket. You have to pay 40% of that to Uncle Sam, so that's going to taxes. 20%, let's say, is your cost of marketing. Then you have another 20% as an operational cost, and then at the end you have a real income of $400,000. Out of that $400,000, you're gonna get 10% for reserve, so you're gonna save $40,000 for in case of an emergency. You're gonna have $120,000 for growth, so that's extra money that you're gonna be reinvesting for the next year or the next month. You're gonna have another 30% to payroll. That's the money that you're paying to your employees. The profit at 20% is $80 that is going to be saved, and at the end of the year is going to your pockets. And then another $40,000 in case as a reserve for operational or administrative costs. As you see, you have in total the $400,000, and then you have your books in balance. And that's what you should be doing with your money. So if you want to have a template or a spreadsheet for organizing all your costs, comment projections. I will share with you that spreadsheet that I have for my customers.